The car market in 2025 seems primed for a major shift, and some say we're on the verge of a crash. Over the past few years, car prices have climbed faster than wages, and many consumers are priced out entirely. With new car prices up $10,000 on average since the pandemic, manufacturers and dealers are feeling the pressure as inventories pile up. What does this mean for you as a buyer? Let's break it down. Car prices are skyrocketing since 2020. A mix of supply chain disruptions, labor shortages, and increased production costs has driven up car prices. Pandemic era factory shutdowns led to a chip shortage, slowing production and making cars scarce. This created a seller's market, allowing manufacturers to raise prices, and they haven't stopped. Today, car makers are prioritizing high-margin vehicles. Base models are nearly extinct, replaced by higher trims packed with features and hefty price tags. Trucks and SUVs dominate production lines, leaving fewer affordable options for buyers. The Toyota Tacoma, historically a go-to for budget-conscious buyers, now costs as much as $50,000. The Ford Explorer, priced around $80,000, has alienated many potential buyers despite being manufactured more cheaply in Mexico. Meanwhile, the Ford Maverick, a smaller hybrid truck starting at $30,000, sells out as soon as it hits the lot cost-effective. The demand for more affordable options. Even though prices are sky high, many consumers are forced to pay, relying on long-term loans with monthly payments averaging $760. Coupled with doubling insurance premiums, owning a car is becoming unsustainable for the average American. One of the biggest warning signs of a potential crash is the sheer number of unsold cars sitting on dealer lots. Across the US, inventory levels have reached their highest point in years. Cars that used to sell within weeks now linger for months. Take the Toyota Tundra, for example. This popular truck now sits on lots for over 200 days, far longer than the usual turnover rate of a few weeks. Its price has ballooned to nearly $70,000, pricing out many loyal buyers. Dealers are desperate to move these vehicles, leading to rising incentives. Rebates are averaging $3,744 per vehicle, the highest in 3 years. 0% financing deals are becoming more common for qualified buyers, especially on non-hybrid models like the 2024 Kia Sportage. This overstock, combined with higher prices and fewer buyers, spells trouble for the industry. The financial strain on buyers is evident in the rise in repossession rates, which are up 23% compared to previous years. Higher interest rates make monthly payments harder to manage, pushing more borrowers into default. Banks are reacting by tightening lending standards. It's now harder to get approved for a loan or lease, especially if your credit score isn't stellar. And this creates a vicious cycle. Fewer buyers qualify for financing, leaving even more cars sitting unsold. The used car market, while still strong, is also facing challenges. Vehicles leased during the pandemic are now returning to the market, but there's a catch. Fewer cars were produced in 2020 and 2021 due to the chip shortage, so inventory remains limited. This scarcity has driven up trade-in values, benefiting sellers but hurting buyers. If you're looking for a used car, you're likely to pay a premium. However, as new inventory grows and prices drop, used car values could stabilize by late 2025. Are we heading for a crash? All signs point to a potential correction in the market. Overpriced models where manufacturers focus too heavily on high-end trims, leaving a glut of vehicles that most people can't afford. We have to tackle high interest rates. Financing costs remain a barrier for many buyers despite recent rate cuts. Rising incentives are increasing where manufacturers are offering more deals to entice buyers, a clear indicator of oversupply. Experts predict that new car prices could drop by 3 to 5% by the end of 2025. This isn't a massive decline, but it's a step towards affordability. Additionally, programs are expected to become more generous, potentially offsetting stubbornly high sticker prices. There's a silver lining for buyers. While the current market is tough, there are opportunities if you know where to look. Here's how you can get around some of these conditions. Look for incentives. Keep an eye on manufacturer websites for deals like 0% financing, cashback offers, and rebates. These promotions are becoming more common as dealers try to clear out inventory. Consider 2024 models. Many 2024 models are sitting unsold, which means better deals for you. For example, the 2024 Kia Sportage is seeing steep discounts right now. Be patient. Spring 2025 is expected to bring the best financing options as rate cuts take time to filter through the market. If you can wait, you'll likely save money. Focus on affordable models. Cars like the Ford Maverick prove that there's still demand for budget-friendly vehicles. Shop around for entry-level trims and hybrids, which often qualify for additional incentives. Don't overlook used cars. While prices are high, trade-in values are too. If you're upgrading your current car, it could offset the cost. Electric vehicle sales, once booming, may be slowing down in 2025. Without federal tax credits and state mandates, many consumers are hesitant to make the switch. EVs are still more expensive upfront than gas-powered cars, and the charging infrastructures isn't widespread enough to convince skeptical buyers. The exception, as always, is Tesla. With strong brand loyalty and competitive pricing, Tesla continues to dominate the EV market. However, even Tesla may face challenges as more affordable options from competitors enter the fray. The car market is undergoing a transformation. Manufacturers must adapt by offering more affordable options, not just luxury models. There's a growing demand for vehicles under $25,000, but few automakers are meeting it. Incentives will play a key role in the coming months. The more deals manufacturers offer, the more likely they are to move inventory and avoid a crash. Rising interest rates and tight lending standards will continue to test the resilience of buyers. By the end of 2025, we could see a broader range of entry models returning to the market. The 2025 car market is challenging, but it's not all doom and gloom. For buyers, this could be the year of better deals, increased incentives, and lower prices if you're patient and strategic. Watch the market closely, compare offers, and don't be afraid to negotiate. With the right approach, you can take advantage of the shifting landscape and drive away with a deal that works for you. Stay informed, stay patient, and remember, walking away from a bad deal is always an option. As usual, let me know your thoughts in the comments below. Remember to grab a copy of my ebook, The Parts Manager Guide. See you next time.